Every adult in the UK has a massive £20,000 ISA allowance to take advantage of each year. Why should you be interested? Well, it can help save you from a lot of tax and help your investments grow quicker and faster. But you might be a little bit confused and have a lot of questions like, what is a stocks and shares ISA? How do I open a stocks and shares ISA? What do I need to open an account? What happens in the next financial year? When does a £20,000 limit refresh? What can I invest in? Well, don't worry, we've got you covered. If there's any questions you want answers to in particular, then feel free to look at the timestamps in the description below. All you need to worry about now is saving the £20,000 to invest. But before we jump into the video, if you want to learn more about finance, investing or income growth, then feel free to subscribe to my channel. What is a stocks and shares ISA? This is an individual savings account, abbreviated to ISA or pronounced ISA, which you can use when buying stocks and shares in companies. The only difference the ISA has over just regularly buying stocks and shares is that you're protected from paying taxes on these investments. If it isn't in an ISA wrapper, then you might be subject to taxes after selling your investments. The same goes for taxes on dividends. How do you get a stocks and shares ISA? Most investing platforms allow you to open a stocks and shares ISA when you apply for an account. I'll show you two examples here on the screen with two popular investing platforms. The first one is called Vanguard, which I personally use. You can see on the screen that when you apply for an account, it gives you the option of what account type you'd like to select. You can see here that clearly you can open a Vanguard stocks and shares ISA. Or as another example, you might use the platform from Hargreaves Lansdown, which is very similar. When you apply for an account, you can see you can open a stocks and shares ISA. What do you need to open an account up? In order to open an account, you need to be a UK resident and at least 18 years old, with the following information to set up an account. You need your national insurance number, your direct debit card details, and your bank details for regular payments. Please note that each platform will have their own minimum requirements in order to open an account up. As you can see with Hargreaves Lansdown, to open an account you need at least £100 in a lump sum or a direct debit of £25 a month. What happens after the financial year? In short, not a lot. The only part that does is any remaining allowance you've had left. Let's say you invested £15,000 in the previous financial year. You would lose the remaining amount, which would be £5,000. But don't fear, your £15,000 is still protected from the taxman, and sweeten the deal even more, your allowance always resets at the start of the next financial year, meaning you would now have a new £20,000 allowance. You do not need to open a new account to get this. It's really straightforward. If the allowance stays at £20,000 for the next 10 years, you can technically invest as much as £200,000 with all the capital growth and dividends protected from the taxman. Does the £20,000 refresh each year? As I've just said, it does. The government could change the levels from year to year if they choose to. The allowance used to be £15,250 until they increased it in 2017 to £20,000. It's been at that level ever since, but it could change in the future. What can I invest in? You can invest in almost anything you'd want, but the most common options are stocks and shares, index funds, or bonds, but it'll be dependent on what the platform you use. This means it's important to check what is available before opening up an account. What happens if I put more than £20,000 in an ISA? If the platform you're using doesn't automatically stop you from doing this, or at least warn you that your deposit will take you past your annual limit, then the money over this allowance will be subject to tax and will not be protected by your ISA. HMRC will be able to see that you've gone above your limit, so don't bother trying. Can I have more than one stocks and shares ISA? Yes and no. The reason these platforms ask for your national insurance number is that it means that the government can check that you aren't trying to get away with more than £20,000 a year. You can only pay into one stocks and shares ISA in a single financial year, but you can choose to stop paying into one stocks and shares ISA and start paying into another one on another platform in a different financial year. Regarding transferring money from one stocks and shares ISA to another, I will answer this later in the video. Is this allowance in addition to other ISAs out there, such as a cash ISA or lifetime ISA? No, the maximum you can save across all your ISAs is £20,000 a year. You can split them how you like across all the different types of ISA, however it cannot exceed over £20,000 overall. Any additional money over £20,000 would be subject to tax. What happens when you hit your limit? Let's say you've smashed it and you've invested £20,000 in your stocks and shares ISA, but you still have more to invest. You have two options really. You can either invest your additional money into a general account, but this money won't be protected from tax. Or your other option would be you could save your money for the new financial year where you get a fresh new allowance. Could my partner also have their own stocks and shares ISA? Yes, they can. This means you can have a combined ISA allowance of £40,000 a year for a couple. You will still have separate accounts, but there's nothing stopping you from topping up the other person's account with the additional money you have. Can my child have a stocks and shares ISA? Yes, they can if you're the parent or guardian. It's known as a junior stocks and shares ISA. The child does need to be a resident of the UK though, but there are two key differences between a normal stocks and shares ISA and a junior stocks and shares ISA. The first is their allowance is only £9,000 per year compared to the £20,000 of the normal one. Second, they cannot withdraw any money until they've reached the age of 18, so a bit like a pension. Obviously, once they've hit 18, they'll be able to access this, but then they won't be able to use a junior stocks and shares ISA anymore, but that means they'll be eligible for a normal stocks and shares ISA with an annual limit of £20,000. Can I transfer my stocks and shares ISA? Yes, you can. If for some reason you have a change of heart and you want to move your stocks and shares ISA to another platform, then you can. However, be aware that you should not be withdrawing your money to do this, as it will lose its tax benefit. You can request a transfer by speaking to your old or new stocks and shares ISA provider. What happens if I withdraw money from my ISA? If you withdraw money, then it will be tax-free, so congratulations. But do consider that withdrawing money doesn't subtract from your annual allowance. As an example, if you put £10,000 into your ISA and then to decide to withdraw £5,000 of it, your remaining allowance will be £10,000. If you want to put that £5,000 back in, then your allowance will drop down to £5,000. Do dividend payments go towards my ISA allowance? No, they don't. The only money that comes off your allowance is any money that you are depositing into your account. So if you receive £1,000 in dividends and choose to reinvest them, then this will not contribute towards your ISA allowance. Can you give me an example of the tax benefit of a stocks and shares ISA? Sure, I'll give you two. 1. You've decided that you're going to take any dividends out of your account as a treat for your investing efforts. Let's say you've invested a lot of money and you'll be taking around £10,000 each year in dividends. If the dividends weren't coming from an ISA, you'll be subject to tax after your initial £5,000. The tax paid will be based on your income tax banding. Tax on dividends can be as high as 38.1%. But if these dividends are coming from your stocks and shares ISA, they'll be completely tax-free, whatever the amount. 2. You have maxed out your ISA for 10 years in a row and you've invested £200,000 in that period. Let's say after capital growth and reinvesting dividends, the amount has now grown to £350,000, meaning you have gained £150,000 in capital growth. You decide to withdraw all the money and it would be tax-free. If this wasn't in a stocks and shares ISA, then you'll be subject to capital gains tax, which is a tax applied to capital gains above £12,000 in a single year. I hope this video has helped you in your quest to gain more knowledge around a stocks and shares ISA. Please note that I am not a qualified financial or tax advisor, so if you want advice tailored to your own circumstances, then please seek out a qualified professional. If you made it this far into the video, then thank you for watching. I do post other content on this channel around investing, finance and income growth, so feel free to check some of those videos out. Anyway, thanks for watching.